Welcome to Intermediate, a podcast for Santam brokers. I'm Maya Fisher-French, personal finance editor at City Press and My On Money. And each month, I'm joined by Andrew Coates, head of intermediated distribution at Santam, where we share insights on everything from new products and digital tools to industry regulations and developments relevant to intermediaries. Welcome, Andrew.
Hello, Maya.
Okay, I must tell you, the year kicked off with a deluge of emails in my inbox about the updates to the amendments of the short-term insurance regulations. The majority of that related to binder agreements and specifically remuneration of binder holders and intermediaries. So what is the intent of these regulations?
The intent of regulation for me is very simply about fair customer outcomes. It's the right thing to be doing. It should be part of core business practice, and we need to get our head around it and treat it as an opportunity to improve our businesses. It's about greater professionalism. It is a lot about more accountability for the advice that you give and making sure that customers really understand that. And so there's also this huge overlay of the need for better disclosure and much more governance from the insurance companies as well. Transparency of earnings is a key thing. And I think we should see it also as an opportunity to really showcase the value that we offer for the remuneration we get.
So, Andrew, why were these amendments necessary? I mean, you've listed a whole lot of reasons and values for the industry. Were these not always necessarily happening in the industry?
What we recognized quite quickly is that there wasn't always an equivalence of fee for activity in the market. And as you start driving transparency and as customers start really demanding value for the advice that they get and for the services that we deliver, the regulators saw it very necessary to make sure that there was a greater degree of alignment. We've engaged extensively with the regulator on making sure that we do really get that intervention right. And I think related to that, the challenge we had to fix was the competing requirements of efficiency, but managing complexity at the same time. So you should not be outsourcing anything unless it results in incremental value to the end customer. But how do you measure value and how do you measure how do you cost that when our industry is not really clear about what exact activity is done for the different categories of remuneration that exist out there?
So do you feel that, given those concerns, that these amendments are sufficient to address those issues, but at the same time being fair to the industry?
So what has come out is a 9% cap, but it's important to note the 9% cap sits in three subcategories. The first is a 3.5% fee for simply entering into, varying, and renewing a policy. That's the process of new business amendment and renewal. If you do that alone, you can only earn 3.5%. You may also, though, as a separate category, get a fee for what they call determined premium, determined wordings, and determined policy benefits. That's the ability to apply a discount mandate or to manage profitability on behalf of the insurer when you engage with the client. Select the right client, manage policy screening in, and really make sure that the risk that you're writing for the insurer is the kind of the risk that the insurer wants. That 1.5% would never be outsourced on a standalone basis. It would only be outsourced with the bucket of enter, vary, renew. So what you have is a 3.5 bucket and then potentially a 5% bucket. And then also you could get a further 4% if you do claims, meaning that the 3.5 plus the 1.5 and the 4 can then build up to the 9. Is it a fair and reasonable number? It was the outcome of a detailed engagement between the FI and the SAIA as two leading industry bodies who engaged extensively, and we believe it is a reasonable outcome. You could also argue, though, that for administration to really work successfully, you need scale to really make it work. And then if you look at the big insurance companies, you would see that it's very hard to do it. The big insurance companies are all doing administration for between 11 and 12%. So that would question the 9% value. On the same time, there is an overlap between intermediated activities, between advice activities, and between outsourced fees. So whenever you look at the level of a cap, you've also got to consider how that cap adds up to a competitive structure against your alternative competing models.
But are there any unintended consequences with these fees? One of the issues that is coming up with RDRs generally is lower income people or people with smaller policies. Are they really going to be serviced at 9%?
There has to be an argument out there that customers don't always know what they get when they do business with a broker. And here's a real opportunity to showcase why it is so much better to do business with a broker today. There's so much complexity. There's so much change that's happening. Are you really an expert to be able to insure yourself with all this complexity you own? Or is there real value in getting a professional to give you advice? So let's see the opportunity too around transparency to showcase the value. Is 9% the right number? The smaller the policy that you issue, as soon as you introduce capping, you start limiting the revenue that you can earn as a broker for providing advice. So a policy, for example, with a capped revenue stream at 500 Rand a month versus a policy at 5,000 Rand a month substantially changes the amount of engagement you can provide around that when it comes to offering value. So it also has the effect of making brokers become more and more focused on moving up the complexity chain and doing business in the bottom end of value market differently. But there too, there's an opportunity for a broker. We've talked a lot about technology and on-demand and digital and that sort of thing. Don't forget, as a broker, those tools are equally available for you. So do that business differently and you can still be very successful in the commodity end of the market. But then do business again more hands-on, more touch, more face-to-face, where the value of the commission and the fee earnings allows you to do that. So you can actually expand your offering, be more flexible, and be relevant no matter where you are in the price point for a customer.
You can basically have various channels of delivery within your businesses then, depending on the client's needs.
The way brokers need to interact going forward will change. And we will see some brokers will lead that change and others will perhaps probably decide to rather get out. But fundamentally, there's so much opportunity to evolve. Technology doesn't replace us. It augments us and allows us to do things differently. So there's great opportunity in all this complexity, in all this change, to provide advice and to do it differently, lower cost, more efficiently, more transparency, more incremental value.
How do you explain and justify, I suppose, in a sense, those fees and the service and value adding?
The real value for a broker from a Santam context is the incremental ability to know your customer and to know your customer's needs. And that fundamentally starts with a real good approach to your needs analysis. Use that opportunity to explain and manage the expectation of your client, to really know the risk that you're insuring and make sure the customer knows the risk they are insuring, and to explain and validate what it is that you're offering as a service. If there is complete transparency up front and expectations are clear, the ability to deliver on the value proposition of insurance, which is the payment of the claim when it matters most, will not be a problem. So engage, use the opportunity to really understand the needs right up front, and you won't have a problem at the end.
I was quite amazed in reading the Act. The amendments also place a huge responsibility on the insurer, and I'm going to quote directly. The insurer is the overseer of the conduct of binder agreements and is accountable to the registrar for the failure of their binder holder as to performance and integrity. So how is Santam going to oversee this?
There is an onus that comes with the new regulation, and a large part of that is around the governance and control processes. The impact on Santam is that we are much more focused on our due diligence processes, how we select our binder partners. We will end up with significantly less over time as a likely result, as we look to narrow and make sure that our interaction with those binder holders are much deeper. And then as a binder holder, you can expect much more intrusive behavior from your insurer because they have to get more involved in how you deliver the services to the client. You would expect routine quality assurance audits. The demand for data is a requirement of regulation, but it does mean that the insurer is far more aware and closer, so you can expect more active interaction around policy screenings and new client vetting and management of sophisticated rating models around segmentation, pre-screening, optimization of new business and leads and quotes, and then lifetime value segmentation and renewals. All those typical real pricing engines that sit at the back of an insurer now get laid forward into your bind holders because of better integration of data. So on the one hand, you think, oh, that's so much more work and effort. But the value that it can generate to the customer has a huge benefit in sustaining the outcome, both in terms of value to the client and in terms of the profitability and sustainability of the binder holder and the insurer.
So are you really able to better risk rate your books then and your customers, and you're going to have a better claims experience going forward? Is really that the long-term benefit to the insurer?
The real value of outsourcing has been to link the client closer to the insurer and leveraging the power of the intermediary to make decisions on behalf of them. And that's a good outcome. But when it broke down the data and the data exchange value chain, so to speak, it resulted in duplication of effort and the inability to really apply the science that you're referring to. So there's no doubt that the integration of data that's now a requirement, the more closer control will result in better pricing, more accuracy, and a more sustainable outcome.
Given the current economic climate, the premium pressures and competition, are these regulations going to have a negative impact on brokers and on the industry?
Our advice to every broker out there is that regulation is not going to go away. In a world where you have fundamental explosion of data, you've got access to social media like it is, the likes of Facebook and WhatsApp and Google. If we didn't have regulation to protect how our data was being used and how it impacts us as individuals, the outcome in itself is actually difficult to contemplate. So our recommendation is don't fight it. Deal with it in your business. Find a way to utilize the investment that in the cost that is now necessary to also improve the value proposition that you offer to your customers, to grow your professionalism. See training requirements as an opportunity to improve your skill and change the offering that you provide to your customers. And then use it also to potentially justify higher advice fees. Leverage the ability to earn new revenue streams by doing things better and more professionally. If you can deliver, although there is a higher cost potentially that does as a result get pushed on to our customer, if it comes with higher value, it will still result in a better outcome for everybody. And it's just our challenge out there to make it work for the customer and ourselves by really adapting and managing change.
You know, Andrew, I'm just seeing so much change in the financial industry. And obviously from a journalist perspective, I think a lot of it's good. But it must be very, very challenging out there to be an advisor, to be a broker. Any words of comfort?
It is tough out there, but I think that what's important is you're not alone. When there's this kind of change, there's opportunities, there's going to be winners and losers. I think it's important to know that you don't have to do everything yourself. Adapting to technology and regulations, there are lots of people out there who help you do that. So partnering is an important way of surviving through these difficult times. And then also know Santam really believes in the value of the intermediary. It is by far our channel of choice. It is still globally the largest distribution channel in the world. Customers need good advice now more than ever. We want you to be successful. We are very committed to trying to walk this journey with you and to giving you every possible support through these tough times. So lean on us too. We want to be there for you as much as we can.
Well, thank you, Andrew, and good luck with a very tough year ahead, I think, for everyone. We hope that you, the listener, took something away from today's episode. Remember, Intermediate is not meant to be a one-way medium. We want to hear from you. So please share your thoughts, questions, and story ideas through santambrokers@santam.co.za. For your convenience, you can listen to the show either on your phone or computer using the podcast player on the Santam Broker portal, or you can subscribe via the podcast app available through iTunes. Thank you for listening, and we look forward to presenting the next episode of Intermediate. Goodbye from me, Maya Fisher-French, and from Andrew Kuth.
Thank you, Maya, and thank you to all our intermediaries out there who are listening.